Awesome. Welcome back. This is the season finale of Game Trader Live. I do these episodes at the end of every trading month, the last day of the trading month, which is today, but it's also the last day of the quarter and the last day of the year. So we are going to take a look at the charts of markets and individual companies, and I'm also going to provide some fundamental analysis of some of the companies in our coverage universe, so like Apple, Nintendo, Microsoft, whatever. I'm going to be looking at both technical analysis, which is chart based, and then also fundamental analysis, which is like bottom up fundamental analysis of the companies. Because I think we're in a really interesting place right now, and I don't think there's any reason to get super bullish or super bearish until we actually see where the price action is going. So let's look at some charts. What do you say? I'm going to start with the S&P 500, or the SPY. This is the ETF for Spider's S&P 500 Trust. You can also just look at the S&P 500 if you want. It's going to be the same chart. The S&P 500 was up 23.38% this year. This is a yearly bar chart that I'm looking at right now. So we had an inside year last year and up. So that was a buy signal above 477.55 cents. It was basically active almost all year. So you just had to wait for simultaneous breaks in other time frames. But yeah, it was up on the year. It was up a ton. And you probably beat most active managers who were shorting things if you were just long the SPY this year. That's not always the case, but it was this year. This is what it looked like on the year. As I said, it was kind of just a step stool higher. Only 3 negative months in the whole year for the S&P. And it was an orderly run higher so far. While there are some charts that look downright parabolic, the S&P 500, in my opinion, is not there just yet. Whenever it does get a little frothy, it has its own sell-offs. We may be getting one right now, for all we know. So yeah, that's the S&P 500. Let's look at it on the... Sorry, there's a yearly chart. So if you want to buy a breakout of this, you're going to have to buy it above 609.07 cents. That would also be your stop for a breakout to the highs. It would have to go a lot lower to really be bearish on this chart. But what I'll say is that, we can look at shorter term time frames. So you look at the quarterly chart, really no reason to get bearish here. The monthly chart, yeah, okay, we came back inside of the previous month's range. So you want to watch below 580.91 cents, which was the low of December, for a sell signal in the S&P 500. But yeah, we should move on to other indices. I think probably more important to watch is the... Oof, that's not a great looking bar. This is the Qs, the Invesco QQQ Trust. This is called the NASDAQ 100. I don't know if there's actually 100 stocks in it right now, but it's like the largest companies in the NASDAQ. So NASDAQ 100 did not go inside year last year, but it did break above last year's highs. It tried to break down 2 years ago. It did not. And now it's at a all-time high. When you look back at the NASDAQ for the last 30 years, that's definitely a more parabolic looking chart, but once again, not as crazy as some of the underlying stocks that I'm going to point out today. But yeah, the NASDAQ, you're going to want to watch for a break above 539.15 cents and a break below 395.34 cents. I'm going to just bring this up now, but these were really big years. The S&P, I said it was up 23% on the year. The NASDAQ was up almost 25% this year. It's very likely that we see some churning around here, where, I'm, like I said, I'm not predicting anything, but I can tell you that there's only 4 possible outcomes here. One is that we stay inside of this range next year. 2, we break out above it. 3, we break down below it. Or 4, we break out above and below it and create an outside bar. So if it's an outside bar to the downside, that would be a sell signal below 395 and 34 cents. But that's already down a ton from where we are right now. We're currently at 511. So we're closer to taking out the highs than we are the lows. We're about $28 per share of QQQ from taking out the highs. But I'm just saying, those are the only 4 possible outcomes here. So we're going to react accordingly. The problem is this is a yearly chart that we're looking at, so damage will have to be already have done if you're selling this thing. That's why we look at shorter term time frames, though. So that monthly chart, I bring that up because that could be a shooter to the downside, and I know we're going to see this in other individual charts. I think AMD has a very similar looking chart pattern right now. No, it's much, much worse. No, maybe it's on the yearly chart. Yeah, AMD had an inside year and then it broke out above it all year and now closed back with inside it. So it's actually a shooter to the downside, but it's also a potential reversal strategy to the downside below 117.90, which we're dangerously close to. So this is one of those stocks that, you know, there's your price point to watch, because if that does break down, it has a lot further it can go. This is a stock that, just to remind people, if you want to kick yourself, you could have bought this stock for $1.61 in 2015, and it traded as high as $227 this year. So it's already sold off a ton, but that doesn't mean it can't stop. But yeah, so back to the macro charts, but I just wanted to point out that on different time frames, you can even see similar things. So I believe it was the monthly chart we were looking at here. So yeah, a sell signal below 509.29 cents on the Qs, and that would be a monthly sell signal to start off the year. So we're gonna see this week, because the year starts on Thursday. We're gonna see just how much money there is that still wants to invest in stocks, because usually that first week or the first 2 weeks of the month, you find out if fund managers have more money to invest or less. So it's going to be interesting. And then also it's like, there may be a rebalancing. You may have owned a lot of tech last year, but now you're overweight tech, so you need to buy something else. There's other sectors that are definitely in the mud when you compare it to the NASDAQ. But I do think that the NASDAQ is the QQQ is one of the most important symbols to watch any given day. If you own a mutual fund or a pension fund or anything, it's very likely that you own the stocks that are in the Qs, the top 5 at least. You know, it's Apple, it's Microsoft, it's Nvidia, it's Tesla. It's the usual suspects. So yeah, important indice to watch. One that I don't really care for at all, but is still, you know, something that people pay attention to, is the Dow Jones Industrial Averages. It had a red month. We've seen Nvidia get added to it in the month. Intel has been removed. But when we look at the year, it's going to be similar. Did not stay. So this is interesting. 2022 was an outside year. We broke above that in 2023, and then we continued above that in 2024. So we're still closer to the highs than we are the lows of this year. But yeah, the levels you're going to want to watch is 371.33 on the diamonds. These are the Dow Jones Industrial Average Spider ETF. The symbol's DIA. I think I have the Dow here, but it's easier to look at this thing on my charting software. And then a buy signal above 451.55 cents. That would just be momentum coming in on a breakout of the broader markets. But yeah, if you look at the long term of this chart too, we're definitely higher than we have been. And then before we start looking at sectors, I want to look at the Russell 2000 index. This is another one that I think it kissed up against its all-time high. It did earlier this year. It did hit a new high, but it was a slightly higher high than 3 years ago. So I'm not too convinced. These are smaller cap stocks. These are not the mega companies that you know. These are, I'm not even sure how they define it these days, but these are companies that are smaller. But smaller in these days means you're not a $1 trillion company. Let's see. Look at different time frames here. Quarterly chart could be a shooter to the downside. Something to pay attention to. We're not seeing this in everything, though, so just important to pay attention to which ones are showing more weakness than others. This is an inside month for the IWM, which would mean there would be a sell signal in the small cap ETF. This is the iShares Russell 2000 Index ETF. It would be a sell signal below 217 and 85 cents. And if by some miracle it keeps rallying from here, it would be a buy signal above 242 and 66 cents. So this is a inside bar, and we can now watch it for all it's going to give us an idea of what could happen in January of next year. Now, like I said before, it could break out above it, it could break down below it, it could stay inside of it, or it could do both, break out above and below, and that creates an outside bar. We'll wait and see. I'm just giving you price levels to watch. I'm not telling you what's going to happen. I'm not really in the prediction business here. We look at price action. We look at past history of uptrends and downtrends, and we look for simultaneous breaks across different time frames. But because this is the end of the year, you'll notice that I'm talking about yearly charts, quarterly charts, and monthly charts, because a daily is not really something that's going to move the market tomorrow, or the market's closed tomorrow, but Thursday. So I'm not gonna dwell too much on shorter term time frames on this specific episode. Starting next year, in the end of January, we'll take a look at some of the shorter time frame stuff. But yeah, it's a mixed bag, I guess is what I'm getting at. The Nasdaq's clearly showing the strength in the market. The S&P 500's holding up very well. The Dow Jones has not been as great. I just want to make sure I'm not incorrect in that assessment. But the Dow was only up 12.91% this year, where the Nasdaq was up, 24.9, and the S&P was up 23.37. So the Dow Jones has lagged the S&P 500 and the Nasdaq this year, and for several years. It has a lot to do with just the companies that are a part of it. I know that they've done some rebalancing in recent history, but yeah. So I just want to see what's Dow Jones components. Yeah, companies, components. Here we go. Well, the generative AI, it wants to tell me one thing. Okay, here we go. I actually found an actual website. If you traveled back in time to the year 2000 and you said this would be the Dow, I don't think anyone would believe you. Amazon, American Express, Amgen, Apple, Boeing, Caterpillar, Cisco, Chevron, Goldman Sachs, Home Depot, Honeywell, IBM, Johnson & Johnson, Coca-Cola, JP Morgan Chase, McDonald's, 3M, Merck, Microsoft, Nike, Procter & Gamble, Sherwin-Williams, Travelers, United Health Group, Salesforce, NVIDIA, Verizon, Visa, Walmart, and the Walt Disney Corporation. Those are the 30 components of the Dow Jones. So they're kind of all over the place, and some of them have had some bad news this year that was not really related to the economy. Boeing has had a pretty rough few years. Outside of that, these are pretty good stocks. I think United Health Group has had some issues in recent weeks. The energy industry has not been the strongest. I think Nike has shown some consumer weakness this year. But yeah, there's those usual suspects that the large tech companies are all here, except for Google, oddly enough. But you have Amazon, Apple, Microsoft. You even have boring ones like Cisco. The big news in the Dow this year was that Intel was removed and Nvidia replaced them. Which, yeah, that's just a tale of two stocks there. If you want to take a look at Nvidia's year versus Intel's year. Nvidia's year, Intel's year. Yeah. But yeah. We can jump to some sectors. I think I wanted to look at... Yeah, let's look at the semiconductor sector first. And then we'll take a look at the components of the semiconductor sector. There's several companies now that are approaching or at $1 trillion market cap in this sector. Nvidia got a lot of the attention this year. But I think it's kind of interesting that I believe it's Broadcom, Avago. They merged a few years ago. Come on. Yeah, they're a $1.08 trillion company now. And I think that kind of happened. People weren't even paying attention. But yeah, Broadcom. Oh, wait, no. Sorry. They are now AVGO is their symbol. Had an amazing year. It was up 107.9% on the year. Which means it started the year less than $500 billion market cap, and it ended above $1 trillion market cap. One could argue that this market is broken if there's so many $1 trillion market caps, but I think that speaks more to the value of the US dollar and our monetary policy in this country than it does these companies per se. Then again, you need a market that will buy these valuations. And, you know, I just think there's an interrelationship between what is happening at the Federal Reserve and the risk-taking taking place in the market. But yeah, Broadcom, AVGO, standout semiconductor stock this year that I don't think many people were paying attention to. On the whole, the semiconductor index was up 38.6% on the year. So that did beat all the broader markets. Which is why you're seeing strength in some of these stocks. You look at AMD on the year, it's actually red. Oh my god, it's got a potential rev strat to the downside. But you know, at one point it was up a ton this year before reversing lower. I think some fear of tariffs and some other slowdown in demand for some of their chips has caused a concern there. They've done a very good job executing those, so maybe at some point AMD will be a buying opportunity. And tell you, I'm not going to be a hero. I'll wait. But I don't think AMD is the worst stock to be paying attention to here. Actually, let me take a look at his fundamentals real quick. Yeah, 24 times forward earnings, 8 times sales, 3.5 times book, $200 billion market cap. Their debt situation is under control. This is a company on the verge of dying 15 years ago. Or, 20 years ago. 15. And they've really turned it around. So it's not... I don't think if you're a long-term shareholder, you might just have to hold it out. But it's undeniable that some of these stocks have gotten frothy because of AI hype. It might not even just be the actual AI chips they're selling or whatever. It could just be the hype that's driving some of the share prices higher. And, if they're honest on their conference calls, they can talk their stock down sometimes. And I think we may have seen a little bit of that here. See, where are some other standouts in the ARM. ARM Holdings was up 64% this year. At one point, it hit as high as 190, almost 190 a share. 188.75. It's kind of been churning around for the last few months, though. It did try to get above this range, which I think happened on earnings. But it's kind of been a messy year outside of a couple of really solid quarters. Inside quarter, it is kind of trading at the lows of the quarter going into the end of the year. So a break below 123.11 in ARM Holdings would be a sell signal that you could use, and that would be your stop. If you're short a stock, that would be the price at which you cover it. But yeah, ARM Holdings setting up for a short going into the first quarter of next year. And that would be a 3-month sell signal too. So something to pay attention to in the semiconductor space. And that's kind of what I'm getting at. Is like, if you look at the yearly charts on these things, they all look pretty good. But if you look at the back half or the last quarter of the year, some weakness started to show up in the semiconductor industry. And it could have just been profit taking because, like I said, it outperformed the market. People who have to rebalance their portfolios probably had to sell some of their winners and buy some other stuff with it or sit on cash. But yeah, it's important to note, I think ARM Holdings is one of the more interesting companies in the space because they don't actually make anything. They develop technology and then they license it out. So they have very high margins, but they are going to be dependent on supply and demand of chips that go into Mac, into iPhone, into various Android phones. I believe Microsoft uses ARM in Surface devices, I think. But yeah, ARM Holdings is going to be a stock to watch. I don't think it looks that great going into the year based on this quarterly chart. But, you know, like I said with AMD, some of these companies are in the right industry at the right time. So we could welcome this downside with maybe an opportunity to buy some of these, you know, middle of next year or late next year, or even first quarter, depending on what happens. But yeah, the yearly chart, it's not going to be that informative. The stock's only been trading for 2 years. There's ARM Holdings. Other semiconductor companies. I don't want to waste our time talking about Intel, but here we go. Intel was inside year and down this year. So we look for a break below 1851 for continuation of this bloodbath. This is the definition of a value trap. And if you're asking, what am I talking about? It's a stock that appears cheap. Either optically on the chart, you're like, oh, wow, it hasn't been this cheap since 2010. But the problem is, it's like, even after the sell-off, it's still trading at 22 times forward earnings. And if I had to choose, I'm taking AMD over it. Because you're talking about AMD trading at like 24 times forward earnings. And a PEG ratio below 1. Where Intel's trading, you know, 22 times earnings for next year. But also with a higher, 0.5 PEG ratio. And that's if you believe that they're going to grow next year. I know they've thrown out a lot of people from the C-suite there. So maybe the new people in charge have an idea. I think that a lot of them were banking on this CHIPS Act coming through for them. So it really depends on what the incoming administration is going to do with respects to the CHIPS Act and other incentives to build semiconductors in the United States. But, you know, like they even came out earlier this year and said, we can't make money making chips in the United States anymore. Their foundry business lost billions of dollars this year. So if that's what everyone thinks their advantage is, I don't think it's an advantage as a company. I think it's a strategic advantage for the United States government. So they don't want all these chip plants to close. But they need to figure out something. I think it's wild that, you know, we're talking about Intel. It has a market cap of $85 billion. Apple could buy Intel straight cash. I'm not saying they would, but Apple has enough cash where they could like literally buy Intel. That would make no sense. But I'm just saying that how the mighty have fallen. The other thing I'd point out about Intel that I think is kind of interesting, most of the semiconductor stocks have gotten back to their dot-com bubble high. In the case of Intel, that was $75.81 in 2000. It got as high as $69.29 in 2020, and now it's down here at $20. It did not reach its previous all-time high. And I don't see much evidence of that even happening in the near future. But yeah, so I would avoid Intel until there's some sign that it's done puking. You have an inside quarter. So you would have a sell signal below 1890 and a buy signal above 2643. So we're obviously closer to the sell signal here. It's trading at $20.05. But those would be the levels to watch. A break of either of those would be valid actionable signal for 3 months, January, February, and March. So that's why we're looking at some of these quarterly charts. It's important to know the context of the year. Boy, was that a red year. But also, like, is there any sign that this is over? Maybe. So it's a wait and see. A lot of what I'm saying here is like, here's the levels. Watch what happens to the price and react accordingly. We're not here to predict anything. Except Nintendo Switch's success back in 2017. You're welcome, all of you. Whoever bought, if you bought Nintendo in 2017 or 16 because of me, I haven't received a fruit basket. So anyway, you're welcome. But we're talking about semiconductors still here. Should we talk about the big guy? We can wait. There's some smaller companies in the semiconductor industry. Marvell Technology was up 53% this year. It's got a $95 billion market cap. It's trading at 41 times forward earnings at a premium to its growth rate too. So I'm not sure I would be chasing after it. But that's what a rev strat to the upside looks like. If you're wondering, that was a quarter. My God, it's up 53% on. Holy crap! Hold on, sorry. On the year, it's up 83%. My bad. But that's a perfect description. This is what a rev strat is. First bar sets the range. Second bar trades inside that range. Third bar dips below, only to come back with inside that range. Fourth bar breaks out above the high of the third bar. So if you traded that above $79, you made about $30 on that actionable signal. So that was a nice quarter. 53% a quarter. That's crazy. But yeah, it's also up 83% on the year. These are some smaller companies, obviously. They're not, I don't think people really know much about Marvell, but I am going to just be kind of thorough with highlighting what I'm seeing in the broader semiconductor industry. I think the semiconductor industry is as important to this bubble as the oil industry was in the year 2007 and 8. I think that semiconductors are largely, they're like big oil now. Not all of them. There will be some consolidation, and some companies will just execute poorly. This being one. That's a scary looking chart. This is Micron. Inside year last year, only to go break out way above it. At one point in the year, Micron was at 157 and 54 cents. It's given back almost all of those gains to end back inside last year's range, which means we would have a sell signal in Micron below $79.15, and that would be valid throughout the entire year of 2025. That is something to pay attention to. Quarterly chart does not look great. Monthly chart does not look great either. You had a inside month, outside month broken down below the low of the outside month. But yeah, that yearly chart, that does not look good. That's probably one of the best short setups we have. But once again, that's only if it goes below the low of this year. I'm not trying to get people to chase into things. Let the price action tell you what to do next year. I'm just going to dance around NVIDIA to drive people insane. NXPI Semiconductor, another one of those stocks that had a good year and then reversed back into the previous year's range. So you want to watch below the low of the year, which is 201.58 on NXP Semiconductor. They do a bunch of the near field communication stuff, which I don't think is as popular as it had been. But yeah, let's talk about NVIDIA. Nvidia was up 171% this year. And last year, it was up 238%. So, I don't know. Is it time for Nvidia to rest? Maybe. We'll see. That's a parabolic chart. That's what a parabolic chart looks like. But the question is, are we going to see more parabolic movement in the new year? Or is this a stock that does need to rest, does need to pause, needs some consolidation? We saw it into the end of the year. Let's look at the monthly chart. It started churning around after their stock split, honestly, and it did break out to a new high in November, only to sell off again. I think people were taking gains on this one into the end of the year. And like I said, if you owned Nvidia for the past 2 years, maybe you're rebalancing because you own too much Nvidia. But from a fundamental perspective, I think Nvidia can still go higher. But it's a question of have they seen a peak in their sales for AI chips? And I don't think that's the case. But the problem they're dealing with is can they make enough? And how fast can they make them? And what's the yield of these lines that they're on? But yeah, they're trading at 32 times forward earnings at a 1 PEG ratio, but they're growing sales and earnings so rapidly that I don't think that's that expensive. I said it on a previous episode, I'll say it again. I think Nvidia, if this bull market continues and it does get out of hand and goes full bubble on us, I think Nvidia could trade for $450 a share. That would be the first $10 trillion company, but I think that it could. It could take a few years. So I personally own Nvidia or in one of my accounts that I manage, and I'm looking to add to it. So if by some gift we do have a sell-off in Nvidia next year, maybe there's some tariff saber rattling or something. If that happens, maybe it's a buying opportunity. But once again, we'll cross that bridge when we get there. Is up on the year. So a momentum breakout would be above 152.89. This year's low was 47.32. I don't know if we're going to get all the way back there next year. So we're definitely closer to the highs than the lows when it comes to momentum coming back into the stock. It is now one of the most liquid companies on earth too. It's been battling with Apple and Microsoft for that title of the largest company on earth, basically for the back half of the year. We do have a potential RevStrat quarter to the downside to pay attention to. So it traded inside quarter, broke out above it, only to come back within that. So we would watch for a break below 115.14 per share. That would be a sell signal, and that would be valid for January through March of 2025. So yeah, I may be bullish on the longer term time horizon, but I am paying attention to the shorter term charts. Even the quarterly charts are not really that short term, but when you're looking at yearly charts, they kind of are. To kind of guide when I would want to buy it. I don't want to be a hero in this market. There's so many high flying stocks. Nvidia being like probably the poster child of this AI rally. Before we move on from semiconductors, Qualcomm, let's see, how'd they do this year? It gave up a lot of its gains. I know there have been some lawsuits and whatnot. This kind of looks like the AMD chart, but it's not as bad. Yeah, it hit a high. Wow, it was only up 6% this year. At one point, it was at 230 a share. It's currently at 153. They're inside of a lot of things, but they're also in the middle of lawsuits. I think they're an interesting company because they are fabless as well. They just license their tech out. Speaking of fabs, I think before we move on from this sector, and I know I've spent a lot of time on this sector, but I think it's the most important one to watch going into next year. But yeah, let's talk about Taiwan Semi before we get out of here. Taiwan Semi, pretty simple. Inside year and up above 110.69. If you bought that, you're up $87 right now. Taiwan Semi is up 90% on the year. It tried to churn around for a quarter. It did break out above that. It's probably one of the best looking. Oh, there's a monthly rev strat cooking. So I'm starting to see a trend here. On the monthly chart, we're seeing setups for selling semiconductors in January. We'll see if that happens or not. But a break below 188.94 would be a sell signal in Taiwan Semi that would be valid for the entire month of January. But it has to break below that. And that would also serve as your stop if you were short the stock. I think Taiwan Semi is one of the ones to own forever. The obvious risk is that China invades Taiwan or does something to disrupt the supply chain there. But I think that would cause World War III. So if you're not thinking that World War III is happening, TSM is another one of those. Kind of like ARM Holdings, where maybe you're not buying it up here, but if it does sell off and then you have proof that this price is stabilizing, maybe these are two companies that you could buy next year. I mentioned that with AMD as well. So I'm not buying any of these here. And I already own NVIDIA at a lower price. But I'm paying attention to all of them. I think you should too. Okay. How about an Apple take? You guys want my Apple take? I'm sure some of you don't care. But I know a little bit about investing in Apple. It's currently sitting at a $3.78 trillion market cap. So it's sitting at 41 PE ratio. That's trailing. So let's do... I think it's overvalued. Let me just say it. I think Apple's overvalued. It's trading at a premium to its growth. And what happened here, what I think is really strange about Apple is that Apple car rumors started like here in 2019, 2018, 2020. And the stock started running higher on rumors of an Apple car. There's no Apple car. It's not coming. And if you believe all the reports this year, they have shuttered the entire project and they are not moving forward with it. So then what did they do? They shipped a VR headset for $3,500. I know it's spatial computing, but it was a flop. We have no idea how many units it sold. We don't know what the profits were on it. We know that they spent billions on R&D and billions on acquiring companies to build that thing, but it's a failure. And then the other thing that really caused this stock to rally this year was when they announced, oh, we're going to have Apple Intelligence. And Apple Intelligence is probably the worst AI suite to ship all year. So for this stock to be trading where it is on the merits of the products that they've shipped this year makes no sense to me. That being said, I have one last price target for the stock. It's $323 a share. That's it. I'm not going to provide any other target. That's my last one. It's based on what I think will be the PE ratio at the time that it peaks. And also, if this market is going higher, Apple's one of the largest companies that are part of the market. It's in the Dow Jones. It's in the NASDAQ 100. It's in the S&P 500. It's in every growth portfolio and every value portfolio. It's everywhere. It's ubiquitous. Everyone owns Apple at this point. So who's the greater fool? Who's the one who's buying Apple at 323? And why? I think there's better tech companies to own in the AI space. I think there's better tech companies to own in the consumer electronics space. I think that they've kind of lost their way. And I know I sound like a broken record on this. If you listen to the podcast or if you've been watching this show, I am bearish on the long term of Apple. But that does not mean I think it's going to zero. They go to 120 a share and they're still $1 trillion company. You know? I just think that it's very likely that we're entering a lost decade for Apple that's going to be similar to the 2000 to 2010 era for Microsoft. Microsoft didn't die, and they came out the other end fine, But I just think the days of Apple making things where you're like, wow, no one else made that. That's cool. It's few and far between these days. I think honestly, Facebook's doing cooler stuff. The Meta Ray-Bans project, their AR projects, when they released Meta Quest 3S with so many of the features that Vision Pro has at a tenth of the price, like I think Meta, and look, I'm not a Facebook fan at all, but I think Meta might be a better stock than Apple here. And that's crazy for me to say. But yeah, like I think Apple, you got one more run to a new all-time high, and good luck to you. But yeah, it had an outside year to the upside. It may just trade inside year in this upcoming year. Who knows? But fundamentally, I don't understand how it can be trading where it is. If you've used Apple Intelligence, I have no idea how you could be bullish on Apple. I'd rather own Microsoft in the AI space. I'd rather own Google, and I don't want to own Google. I'd rather own Meta, which I never thought I would say, but I would rather own Meta than Apple stock here. I'd rather own Amazon in the AI space. And I definitely would rather own Nvidia than anything I just mentioned. But yeah, before we, I probably have about 20 minutes left before I'm going to drop a Shacknews Direct. Google had an inside year and up following an outside year. But they have every single regulator up their butt right now. And their core business of search is kind of crumbling. They've killed search. By prioritizing Reddit over actual information, it has definitely hurt search. Good luck finding a single organic search result on a mobile search result screen. Yeah, I don't know. If their core business is search and they're nerfing it by forcing Gemini and Reddit on it, I don't know. I think this might be another one where I'd rather own Meta than Google, which sounds crazy. That being said, maybe Google gets their shit together in the next year and they focus on the right stuff, because they've been researching AI longer than almost anyone. For them to be behind is kind of crazy. I'm not saying they're that far behind. They're clearly ahead of Apple. But, yeah, I think with the regulatory risk around Google, I would avoid this stock. I'm not shorting it yet, but out of all of them, it is the one that I would consider doing it, because I think that they have a bullseye on them from the Department of Justice to the current administration to the incoming administration. I don't think Google is well liked as a company anymore, especially by Wall Street. Maybe a few $1 million to an inauguration fund can fix that. We'll see. But yeah, I actually don't see much from an actionable signal on Google. Another big tech company, Amazon. Amazon was up 44% this year. Sorry, let's recap Apple's year. Apple was up 30% this year, and Google was up 35% this year. All of them beat the S&P 500's performance. And you could argue that the S&P 500 wouldn't have been as good if they didn't have these stocks in them. But, whatever. Chicken and the egg argument. Yeah, Amazon had a solid year. Outside quarter and up. So we want to watch for a break above 233. That would be an all-time high. So that's where momentum will come rushing into the stock. Just orderly run higher. This stock, it definitely digested its move in 2020 when it became, invaluable to people. I think they're actually quite diversified now. Obviously, their retail business still does a lot of the work for them, but AWS is a really good business. Yeah, I don't know about Whole Foods. Some of the other stuff they've done, I'm not really sure about. I do wonder if they will disrupt in the electric vehicle industry, because they could just buy Rivian and really throw everything up in the air. But yeah, it's Amazon. I think resistance is futile in the case of Amazon stock. Let's see. Microsoft. Actually, what was Meta up on the year? Wow, look at that comeback. Meta was up 65% this year. Microsoft was up 12% on the year. Not that great. They had a great they were up 56% the year before. Inside year and up continuation this year. It was higher earlier in the year, and then a lot of this OpenAI stuff came out, and I think Microsoft's CFO even poured cold water on AI investment during one of their conference calls this year. I believe they said you're not going to see the benefits from the investment in AI for like 15 years, 10 to 15 years in some cases. I think that spooked some people. The stock did sell off a little on that, but still up on the year. And like I said, I think they're better positioned than Apple is right now. And they're so acquisitive that like they could probably just acquire some more stuff in the space if they really wanted to. Yikes. That monthly chart. Okay, so that's something we've seen this a few times now. Inside month, followed by a potential rev strat because it broke down below and then came back inside of it. The rev strat actually did take place and then came back inside. So we have a messy situation here. I would just avoid it. A breakdown below 405.57 would be a problem. You could also use 420.66 as a line in the sand if you really want to get crazy shorting this thing. I'm not telling anyone to short or go long any of this stuff. Just giving you some prices to pay attention to. I think that'll do it for big tech. Let's talk about video games before I get out of here, right? I'm sorry, my green tea is that perfect temperature right now, so I have to sit here and drink some of my tea. God damn, I love green tea. Let's see. Corsair. They had a god-awful year. Inside year and down. Hit a low of 559 this year. Just interesting to me because this company's dead or it's going to get acquired or something. It's very cheap. You're talking about a $691 million company. It trades at a discount, 50% discount to its annual sales. It's a tech company that's trading at 1.15 times book value. The revenues are not growing, but they're not, I guess they're down 16% in the last quarter. They do have a decent amount of debt on the balance sheet, $245 million of debt. It's not heavily shorted anymore, 7% short interest. I like their products. Honestly, that's why I pay attention to them. But yeah, they're not doing well. GameStop could acquire them straight cash. Somewhere a monkey paw just curled. I guess since we're talking about GameStop, we might as well look at that chart. This is an interesting one. So you had the mega year where it went from $4.27 split adjusted all the way up to $120.75. The next year traded inside of that range. Last year, it broke down below this range only to come back inside of it, setting up a rev strat, which happened. When it broke above, and if you follow me on Twitter or on Cortex, you've seen me post about this, 27 and 65 cents. That was the line in the sand to watch this year. When it broke out above it the first time, we saw a run all the way up to $64.83. The CEO then poured cold water on the rally by issuing 2 secondary offerings, raising $4 billion of cash, and screwing over all the shareholders. So congratulations, if you still own this stock, you held onto a $33 a share paper loss by the end of the year. And if you're still championing that CEO, you're an idiot. There was a day earlier this year. I want to say it was, Friday, May 17th. Keith Roaring Kitty Gill was a billionaire for a whole 40 minutes. And I don't think the billionaire Ryan Cohen took kindly to that. Anyway, back to the yearly chart here. So now we have an outside year. So we have a set of lower lows and a set of higher highs to pay attention to, at least in the last 3 years. We still have not gotten back to this high, and we have not gone back to this low. I don't think it's likely that we will see GameStop trade below $10 a share anymore, because they have about $10 a share of cash, and they don't really have any debt left, and they're letting their bad leases roll off. So I think it's just dead money. It'll trade. People will come up with reasons to buy it and reasons to sell it. People will focus on the options market around it. I'm a fundamental person, and right now what I'm seeing is the company has started making money instead of losing it, and they have more cash than they've ever had on their balance sheet. Maybe they acquire something, maybe it's just there for a rainy day fund, and maybe it's a situation where they could take the company private if it does get shorted again. But right now, when you hand the shorts tens of millions of shares to cover with, I'm not going to act like this even has a remote chance at a short squeeze. Those days are over, folks. If it rallies, it's on its own fundamentals. It's not a squeeze anymore. Yeah, 8.7% short interest, and I know that there's short call options that affect things, but you're talking about short interest less than 10%. You're not gonna see a move to 120 on that. You're gonna see a move to 120 if the fundamentals drastically change, which I do think is interesting. You're talking about a company with 160 trailing PE ratio, so they have earnings now, and they trade at 3 times book value, 2.6 times sales, but their sales are declining, and their earnings are declining in some cases. Well, it depends. The last few quarters, they've actually been able to turn a profit. We'll see about this next quarter. Christmas quarter tends to be the biggest one for GameStop, and they report, I don't know, sometime in February or March. They have a very weird fiscal year. I think their Q4 ends in January so that they can get gift card revenue in. Hopefully you got a gift card for the holidays. But yeah, they have a PE ratio, so I'll give them that. But yeah, I've said this before, and I'll say it again here. What I think is likely to happen, because this stock is so heavily speculated on in the options market, I think it's likely that it'll stay inside of this range next year. Because you're talking about as low as $9.95 and as high as $64.83. And it's currently dead center at around $31.49. I just don't know. I don't know what's going to happen to cause it to do anything. The monthly chart, you had an inside month and up and a continuation only to trade back inside of that range. You had an inside quarter and up, so you want to watch for a breakout above 34.37, and that would be a buy signal for 3 months, the first 3 months of next year. Inside month and up, continuation, inside week. I'm not too focused on that. If it doesn't trade inside year, I'll be surprised. But you know what? I like being surprised. Let's see. What else is there that we should talk about? CD Projekt Red. Their stock was up 60% this year. And it was an inside year and up buy signal above $10.46. So I think we may have seen a bottom here for their stock. I think the 2020 to 2022 period for Cyberpunk and all the negative press they got, I think it was a steal at $4 a share, and it's currently at $11.52. You want to watch for a breakout above $12.57 for a continuation of this bull move. But yeah, if you bought CD Projekt in the last 3 years, I think you're doing pretty well for yourself, and you should hold on until The Witcher 4 drops, which might be a few years from now, or 3 years from now, or 4. Who knows? But it looked great, the reveal that we saw at the Game Awards. And that's a stock that you can just kind of set and forget at this point. I think they learned their lesson from the Cyberpunk release, and Cyberpunk 2077 is a materially better game now than it was. So yeah, we'll keep an eye on that one. But yeah, congratulations to anyone who did buy it in the last few years. I think you got a pretty sweet deal. Another company with a big game coming out is Take-Two Interactive. Boy, howdy, was I wrong about this one. I shorted it at 100. I covered it at 150. Licked my wounds, moved on with my life. It proceeded to go up another $30. So thank God I covered. Inside year and up buy signal. At times it looked like it was setting up for a rev strat. It did not. Never try to chase a rev strat until you actually know it's happening. But yeah, you had a buy signal on the year. A breakout above 191 and 91 cents would be a buy. They have GTA 6 coming. There's going to be a GTA 6 trailer, another one, and then another one. Then there'll be the inevitable, hey, we need to delay this for polish announcement, and the stock will go down, and then it'll go up again into release. So we're going to keep our eyes on it. Take-Two's really interesting. And they bought Gearbox. So they now own the Borderlands franchise and some other stuff. I don't know who owns Duke Nukem's corpse, but whoever it is, please make a new Duke Nukem game. But yeah, that's Take-Two. I want to mention Ubisoft because they had a god-awful year. Their stock was down 46% this year. It did trade inside quarter. So a break below 222 per share would be a sell signal. A break above 313 would be a buy signal. I might just buy some of this. I think they're going to take it private or someone's going to acquire it in the next few years. It's just getting kind of silly where it's valued at. The problem is, like, I don't trust their management at all for good reason, but I do think that at some point you have to look at the sum of the parts. Yeah, Ubisoft's trading at book value right now. It's very strange for a company with IP like that to be trading at book value. It implies that they're going to keep losing money, which is not great. Because, they lost, $158 million last year. They have $2 billion of debt, $2.3 billion of debt, only $900 million of cash, and they're burning through their cash. That's trading at like a single-digit PE ratio. Trading at a discount to its growth. Like, at some point, a turd like this becomes a buy. So you do have that you have a potential quarterly setup. But this was a stock that was trading at $25, $24.55 in 2018. And it's currently trading for $2.70. If it doesn't go bankrupt, it's definitely worth taking a look at to buy it. And that's kind of my shit right there. I look for crap like this. I love companies in terrible situations because that's where the opportunities come. But like I said, I don't trust the management there. Just real quick, speaking of I don't trust the management there, this is what happens when you buy an election. If you buy an election, your stock goes up. Tesla was up 62% on the year. But really, it's been the last 2 months. It was up 38% last month and 16% the month after. The stock is not trading on fundamentals at all. The Cybertruck is garbage. Their service is some of the worst in the automobile industry. But when you control the government and the subsidies and AI regulation, your stock gets to trade at a premium. And I will have to pay attention to just how much influence the CEO of Tesla has over the president of the United States. So far, it seems like it's a significant amount. And I think that this stock is trading on that more than anything. So maybe when they announce results here in the near future, the market will react. But we'll have to wait and see. But I am not telling anyone to buy it up here. It's a $1.3 trillion market cap trading at 121 times forward earnings. That's 5 times their growth rate right now. 15 times sales, 19 times book value. Categorically the most expensive stock that I follow right now. I guess technically GameStop's more expensive, but from a market cap perspective, there's not a bigger company of this size trading at such a premium to its growth. Last but not least, I just want to leave you with some Nintendo thoughts before I get out of here. I think this chart's really interesting. So this is 2020 when the world almost ended from COVID and all that stuff. the lockdowns, all the horrible shit. Nintendo traded in a range from $7.16 all the way up to $16.51. We have not broken out of that range in 4 years. So there's your pivot. You want to watch $16.51 next year in Nintendo. A breakout above that is to be bought. That's also going to be your stop if we do get a breakout and it reverses. I expect the stock to go higher on the reveal of the Switch 2, or the announcement of the announcement. But what happens afterwards, once we know the specs, once we know the launch lineup, that's when it's really going to be tough. I'm concerned. I'm concerned because Nintendo had everything going for them in 2017. The yen was super strong, so they were able to buy components for their hardware device at a very good price. The expectations were very low for the company. But then you look at the last 8 years, they were able to repurpose Wii U games like Mario Kart 8 Deluxe. They don't have that again. Maybe it's going to come in the form of, Wind Waker remake or Ocarina of Time remake or like some DS ports, but they had a nice catalog of software from the Wii U that they could just port over to the Switch. That increased their margins. The yen increased their margins. The fact that they used a very old Tegra chip increased their margins. I really question if Nintendo is entering the 4K gaming world, if that's what we're about to see. I question how often we're going to get releases from them, how much they're going to cost to make, and how much they're going to cost to buy. Also, there's a ton of competition around Nintendo right now. So I worry that there's cause for concern at Nintendo. That being said, I still own the stock, but I will consider what happens next quarter intensely, and I may decrease my position. So yeah, that's gonna do it. I'm gonna drop it. I'm gonna stay live here. I'm gonna mute my microphone, and we're gonna drop a Shacknews Direct for the latest update for our app Bubbletron, or it's a website, Bubbletron. Go to bubbletron.com, play it for free. But yeah, enjoy this special presentation of a Shacknews Direct starting right now.
Chinese food restaurant porn for alien-focused video game and war tweets. AI chatbot, Reddit comment system, website. Calculating. I am Bubbletron.
Hey everybody, Asif here, and welcome to today's Shacknews Direct. What you just saw was a music video announcement trailer for our latest Bubbletron soundboard update. And instead of talking about what we did in the update, I thought I'd just give you a proper gameplay demo right now. Okay, let's jump in here. The first thing is just to note what we already had from a sound perspective in the game. It was basically just clicking on Bubbletron's mouth.
I am Bubbletron.
And he says that. We also have 4 unique barks from Lola in here. And then that was it. So we had 5 samples. I don't even think I got to the 4th bark sample. But yeah, that was it. We launched with those 5 samples. But something that was brought up early on from playtesters was like, hey, this might be interesting if you added more voice samples. So that's what we did. We recorded voice samples for every single parameter in the game, which means every day when there's a new role and all these different parameters show up, you're now going to have vocal samples for each of these. So here we go. It's probably easier just to show you.
Quadraphonic, pro wrestling, barrel aged, foreign owned, Indian food restaurant, brick and mortar, steel company, glow in the dark, catalog, infomercial, sugar, hotel, AI image generation tool, cartoonist, neural network, smartphone, verified social media account, app developer, award show, search engine, for those hard to reach places, for socialists, for UFO hunters, basically GeoCities.
So yeah, every day you're going to be able to mess around with this in like a soundboard function before you even click hit the market. So if that's all you want to do with this thing is just have fun with the soundboard, you can.
Indian food restaurant.
Yeah, let's try one of these.
Infomercial.
Yeah, I think that sounds good. The next thing we added, which we did mention in the trailer, is a song for the calculating screen. So here goes nothing.
Calculating.
Indian food restaurant. Infomercial. Basically GeoCities.
So that's now what will happen when you hit the market. So it's important to note now that you see there's a money hat next to infomercial. This is the other update that's in today's soundboard update. Basically, you can hit top valuation of the day and a low valuation of the day, like the lowest possible and the highest possible. We're going to indicate that with a top hat for the top valuation and a poop emoji for the lowest valuation. So let's see if I can guess what a low valuation would be here.
Steel company.
Maybe a steel company.
Catalog.
Yeah, catalog. There you go.
For socialists.
I might hit a home run here. Let's see.
Calculating.
Steel company. Catalog. For socialists.
It does not look like it hit the low valuation, so let's see if I got any of them. Yeah, as you can see, For Socialists and Catalog are both considered their parameters for the lowest valuation possible today. What could I have gotten wrong? Maybe Brick and Mortar?
Brick and mortar.
Calculating.
Brick and mortar. Catalog. For socialists.
So yeah, you see it says today's lowest possible valuation. I can post on the leaderboard now. So you click on the poop emoji and you can add your initials there. And now you'll see these all have poop emojis next to them. This does not mean they're the only 3 possible parameters that can get you that, but we feel like this is going to help people who want to hit the high and low valuations of the day. Otherwise, you can just have fun and click on
glow in the dark.
Maybe a glow in the dark infomercial. For those hard to reach places.
For those hard to reach places.
Calculating.
Glow in the dark infomercial. For those hard to reach places.
Well, it looks like I'm close to the top valuation, but I did not get it. So maybe this the new Top Hat update will help us here. I did indeed get the high valuation parameter in the first column and the second column. What is the third column? What do you think that would be? Not a verified social media account. Maybe app developer? Let's try app developer.
App developer.
Calculating.
Oh, looks like I got it.
Calculating.
Glow in the dark infomercial. App developer.
Today's highest possible valuation. You can go back to the leaderboard. Click on that. Add your initials. And ta-da. So yeah, that's the new gameplay loop. The biggest updates are obviously the addition of all those vocal samples. That means every day you're going to have,
Foreign owned AI image generation tool. Search engine.
you're going to be able to just put together any combo based on the parameters that show up any given day, and then hit the market.
Calculating.
For an owned AI image generation tool, search engine.
So that's basically it. We mentioned in the trailer, Bubbletron's free to play, and there's no signups required. It's just a website that you can pull up on desktop or on mobile browsers. If you want to get back to that home page, you just click on the Briefcase Man and Lola down there. Each day we do have like a On This Day in History that shows up. And yeah, we hope you'll try it out. Even if you're not trying to get the high or the low valuation, we think it's a pretty fun update just for clicking on random sounds. So yeah, I think that'll do it for today's demo. And that's going to do it for today's Shacknews Direct. Our staff is still out on holiday until January 6th. So if you're looking for more updates about other things going on at Shacknews, we will be back in the new year with a whole gang of announcements and our usual cadence of amazing content drops. So thanks everyone for supporting us in 2024, and we'll see you next year.
Chinese food restaurant porn for aliens focused video game and Gen 4 tweets. AI chatbot Reddit comment system website.
Calculating.
I am Bubbletron.